Hunters, today is one of those days that amateurs misread completely. The market tightens, crypto coils, and we're heading into December with one thing building, which is pressure. Okay, we have a lot of pressure in the market right now, and we have a lot of mixed signals. I've got a few stocks and cryptos I want to discuss throughout the video, but first, I want to look at the overall market snapshot and give you guys an idea of where we are currently. So, in my opinion, tech is shaky. The leadership names are not really showing strength or as much strength as other plays, as you can see here with Nvidia, exemplifying exactly what I mean. We are still in a bull flag, which could potentially end up breaking out or resisting here for further dip below. And I think this is an example, a good example of where we are with tech and how I think everything is leading towards the PCE data later on this week on Friday, and it's what I'm watching out for. Yields are starting to tick up a little bit. So we have 10-year yields moving up. After that inverted head and shoulders that I mentioned last week, we've seen yields move higher. There's no clear direction or path where the Fed will go. We had Jerome Powell speaking approximately 1 a.m. in UK time, and I think that boosted the markets yesterday. So we've had a situation where we have an inverted head and shoulders, yields growing and putting that pressure on tech and growth stocks. So that's the reason why really we haven't seen tech stocks and previous leaders do well during the last 1 or 2 weeks. We've also had consumer weakness. It's showing. We have retail names, coffee chains, food companies, discretionary spending, all rolling over. The market is pricing a slowdown, not speculation. Of course, there is that. There has been some news about or general sentiment shift where traders are seeing an interest rate reduction next week with the Fed, and that has led to some momentum in the markets. But overall, it's not looking that great, and there's no breadth in the market. Crypto, on the other hand, is coiling. And I'll show you an example here of a coiling crypto. We can grab, I guess we can grab link USDT. Here you have it. There's a 24-hour chart. We have a situation now where we've had it coiling around this level, maybe a double bottom, if you guys see that. But overall, we are seeing a situation where the market is a little bit weak, and we are not ready, in my opinion, for a serious move up into higher levels on crypto. It's a perfect volatility compression. I speak about volatility a lot and how I stay out of volatility, and my job is to time that exit of the market out of volatility into momentum. And then once it's in momentum, to be able to ride those trends. This is the reason why my community is called TrendHunters. This is what I do. I look for volatility zones, breakouts out of those volatility zones with high probability, and then we ride the momentum into a trend. So perfectly setting up here, crypto, but I think it still needs a bit of time, so we have to be patient. In my opinion, this isn't a trending environment. There are some plays out there that we can take, and I've taken a few plays recently. TMC being one of those plays yesterday where I achieved a 1 to 10 risk-reward ratio. But in the meantime, I will say it is a very, very tricky market, and it's a stock pickers market. I'll keep reiterating this. It's not buy everything and you're going to make money. Yes, the S&P 500 and NASDAQ moved up a little bit higher, but then we are seeing a little bit of weakness in the last 2 days as well. Now let's go into the section I call the big hunts, right? Compression means expansion is coming, All right. So if we're compressing like we are here with Bitcoin, and we are tightening, and we're within a volatility zone like we are, and we're doing these fake out structures that we're currently doing, testing the bullish, the bull flag, and so on. It really means that there is a breakout within the next 24 to 48 hours. This could be linked with the PCE data. It could also lead into a 1 week compression lasting until the Fed interest rate decision or just before that. What I also want to say here is institutions are moving and rotating. They're accumulating, hedging, and they're being quiet about it. And you could see that with some of the rotations in place. For example, if you look at my current portfolio here, we saw a nice move in gold, and then a move down. We're going back into risk on a little bit. That's the reason why gold stocks and gold picks drop down a little bit. But it doesn't mean that move is finished. It could just mean there is a 1 to 2 day, a week dip into these other zones, like the 20 EMA, for example, or other support zones, while there is a rotation into other sectors and in global markets or risk on assets, and then back onto defensive opportunities like gold, and less so in tech and risk on. So it's really an ebb and flow, a move which is essentially, in my opinion, hedges happening in the markets. As you see in here, gold rising is a hedge really against market crash in reality. My opinion, I think gold will also crash if the market crashes and we get a move lower here. Crypto is behaving exactly as it should before a major leg up. Okay, so we've had this significant dip, and we were due a dip to the monthly zones. I'll just grab here quickly some of these monthly zones. Then I'm going to go into the S&P and discuss some of those zones as well. So if you look at crypto, it's a bit slow. All right. So if you look at crypto on the monthly, it's built momentum around or just above the 20 EMA zone. Okay. So we were due a dip anyway. We had this overextension zone here, August, September. September proved to be quite resilient, unfortunately, because I think what would have happened is if we had a September drop, it would have been September, October drop, and then November would have been the month that we would have seen maybe a tiny bit of a drop, another further liquidations happening, and then a move higher here into November, then December, leading the March for a move to 130. Okay, that's the reason why we haven't moved yet, but we are seeing some sort of consolidation here. It is expected. Even if we go into a bearish market, we are expecting, at least I am, a move to 100, maybe even 16, 17 for that fake breakout to trap some bulls and then pull the rug on them and come back down for a continuation on the monthly. Now, whether that's going to happen or not, I don't know for certainty. However, what I do know for certain is if there was going to be a setup for a bear market, it wouldn't happen immediately. It would lead to a buy up, which we are seeing right now, to around 100, 107. And then we have shorts putting pressure on the market there. And in reality, that would be institutions exiting slowly around that level, because they wouldn't want to be exiting around the 90 or the 80 zone, which we achieved. They would want to probably exit almost near to the top, and they would give up maybe 1 or 2, 3% here on that move, but it wouldn't be anything major. So they would want to look to get out around this zone. Okay, so watch out for that exit. Also, watch out for short selling pressure as well around those zones. But for me, it's almost guaranteed we're going to go to 100, maybe even 107. So it's just a matter of how we play those moves and how we position ourselves so that we don't get in a position where we're in a fake out. Okay, so stocks, we've seen some nice moves in stocks. I'm going to talk about the S&P, NASDAQ, and then we're going to talk about individual stocks in a bit. Individuals, S&P, this is the monthly, due a correction in my opinion, and we had that last month, but then we end up being bought up later on in that month, which basically means that December, in my opinion, and this is just my opinion and my analysis, December most likely is a red month. It would have been better if we had some time around this level here and then led into early December on a rise, because that would mean that we found solid support. It feels like, yes, the market moved up higher in the last 2 weeks of November, but it just feels overextended here from the key zones, the 10, the 20, on the monthly at least, and it's a bit of a worry for me. That's the only worry I have in the markets while going back into some trades and building my portfolio. It's the only major worry I have. Yes, the weekly looks pretty good for that overextension. We had the dip buy around that 20, and then we're moving here to maybe 7,100 if we do move higher. But it's looking risky, and it looks like it could lead to consolidation and then a dip to 6.3, which is what I've had as a target for a while. Maybe there's just a little bit of a lag or delay. And if we look at the daily chart here, you're going to see, I'll just bring out my drawings. You're going to see that we've had that breakout. In reality, we're in a distribution, in my opinion, from September onwards, because goes up, comes and retests, goes up again, retests the zone, goes up, retests the zone, goes up, comes down, goes up, comes down, retests the zone, goes up, could potentially come down, retest the zone again, or goes a little bit higher to put in some to trap in some more bulls in this move for that Christmas Santa Claus rally, and then comes back down into late December, and then sets up for a move maybe in the new year. So very, very cautious here, even if I'm buying, because I feel like we don't have a full signal. Yes, S&P is moving well. Yes, it's going back to slowly towards all-time highs. I am buying myself some of the top ideas that I can see in the markets. Again, it's a stock picker's market. I'm buying with extreme caution and picking very well. But the overall market doesn't look that great. And I think it only moves if we see NVIDIA, Palantir, the previous leaders, continue to move higher and start developing a trend again, which they haven't so far. NASDAQ looks very, very similar. Just performed a little bit better because we did see those tech stocks move higher with some enthusiasm and a confidence from traders that we're going to get an interest rate reduction next week. So that's something that we have to watch out for. If that doesn't happen, then where do we go in the markets? The Russell 2000 is an intraday short that I took recently, and unfortunately I sold a bit too early, but it's been moving quite well. So if you see this contrast where small caps aren't really moving, so it's not really a risk on, is it? There's something not really quite right with the markets. And then you have the NASDAQ showing some growth in the last 2 days, and the S&P 500, but there's no breadth. And there's also small caps, which should traditionally be moving well on interest rate news, not moving that well. The VIX dropping, the volatility, the fear is slowly dropping here, going back to we are in extreme fear overall, but we're going back to maybe a neutral level or partial fear. So that's something that we have to monitor. And I would like to see this under 15 for me to feel quite confident with the market trend developing. Overall, mixed signals with, like I mentioned earlier, US 10-year yield. And then we have to look at gold as well. Not gold, we have to look at the dollar as well. And we can even look at gold as well just to make sure we cover that. But if we look at the dollar coming down, I mentioned it last week and I said, this is the key. So the chart will show you quickly here where I saw that breakout, or the breakdown actually, as the key moment for the market to decide the direction here. Are the drawings coming? Yeah. So you see that I've circled all these zones. The bounces made sure that the market kept on going down, especially with crypto. We saw crypto down again once the dollar moved up higher. The dollar found resistance multiple times around this zone. So I was seeing this tightening happening. And then with this move down here, we saw crypto moving higher and risk on assets also gaining a little bit here. And this is one of the reasons why crypto has moved so well in the last 24 hours. And we're seeing some trading happening here. Now, what will happen around this 98.5 zone? We have to assess that very, very carefully. Gold, very similar here, where we're seeing gold drop off a little bit, even though it's in a trend. Like I mentioned earlier, it could be just a temporary dip, and then we can see moves higher. This is all the overall market snapshot. In terms of ideas, I traded yesterday. I think this is a bit too late now because it's moved. I traded TMC yesterday, gained around, I think it was around 12, 13%. We saw a higher gain in post-market where it went back up to $8.30. In my community, we made around 1 to 10 on this one. We had a very, very tight stop loss on the shadow, on the wick of this candle, and we achieved 1 to 10 on this one, as high as 1 to 10 and 1 to 11. So yeah, very, very good here with this one. Yes, I've kept some, I've sold some. It's just I'm trying to see whether this will continue into a slightly higher trend to around $9. That's really why, as a trend trader, that's why I look for it anyway. Other trades that have done really well for us are Intel, and I've mentioned this before. Intel was one of the trades I took last week. I think it's going to do quite well. I have a few other names that I'm watching, but they're not really ready. And if they're not ready, I'm not going to mention them here on YouTube. I will say, if you do want ideas throughout the day, I do share my watch list, and this is a very, very handpicked, selected watch list, pretty much a signal in reality, where I share them in my Discord group. You can join the Discord group by following the link in the description of this video, and being able to find these trades like Intel. I shared Intel. I've shared all of these trades actually in those watch lists, and then there is a separate group for my actual trades with complete transparency. So yeah, I mean, this is where we are with stocks overall quite well. Yesterday gained around 3-4% in my portfolio. Very, very happy with that, and I'm looking to just manage some of these positions actually with the gold one here, WPM and BKR. I want to manage these ones, and then also some of the weaker plays like Lululemon, which haven't really come out of their bases yet fully. I want to be managing Lululemon, Morningstar, PPC as they're coming out of the bases and seeing if they're going to do well. Starbucks hasn't really broken out fully yet, so it might be a bit too early on that one as well, managing that one. Just a matter of watching each one carefully so that I make sure that if we do get an unexpected sell-off, that I get to lock in some profits. In terms of crypto, I mentioned Bitcoin earlier, so you kind of know where we are. I was looking at Link today as an opportunity. I would like to see a bit of a pullback here. So after this move, maybe a bit of a resistance and then a pullback. It'll be quite nice. And then we can monitor. We can monitor some of the other ideas as well that we have in the community. Again, if you want to see more ideas, there's always ideas in the community that I've developed. And there's always ideas and analysis and a number of other things. Okay, in terms of what else can we talk about here? Like I said, it's coiling, right? So this will definitely find some resistance soon, and they come back down, and that will be probably a good buying point rather than buying straight away. Yes, we had the double bottom. Very, very nice setup, to be honest. It's just a matter of my strategy not being quite ready, and I don't want to rush anything. But yeah, if you look at this trend line here, clean breakout, follow through, the market's feeling quite bullish, and we're moving higher. Doesn't mean that we're going to continue moving higher. And remember, last week we moved a little bit higher around this level and had a resistance really quickly. This is looking very, very different, but still, we can still get those dips, and we can enter around those moments. Overall, what I want to say is stay disciplined. I'm not being aggressive here. I'm staying disciplined. I'm staying focused. I'm trading some of the best ideas. I'm looking to trade shorts and longs at the moment in case we get a market flip. And everything is reliant on yields on the dollar clearly moving down, as you saw. And if you've watched my previous episodes, you would have seen with the dollar moving down that we were going to get a nice move in crypto, and that's exactly what's happened. In terms of other social medias, go and subscribe to this channel first of all. Comment below if you enjoyed the content, and if you have any opinions on some of the things I've said, whether you agree or you disagree. It doesn't really matter. I want to hear what from you guys. I also have Instagram, TikTok, and the Discord group, so go and join one of those communities and the other social medias. You're going to gain a lot of valuable information there on how a consistently profitable trader operates. And you can also go and check me out at the US Investing Championship by checking out my performance, so you know that I am who I say I am. Take care. Bye-bye.